One practical question is internal auditor is mandatory for material subsidiary of a listed company. This is a highly relevant question for listed companies, group companies, CFOs, company secretaries, internal auditors and audit committees. So many professionals assume that once the company becomes material subsidiary, internal audit automatically becomes mandatory. But is that correct? So let us analyze the exact provision under section 138 of Companies Act 2013 and Rule 13 of Companies Accounts Rules 2014 and SEBI LODR regulations. First we will go to section 138. Section 138 deals with internal audit. The section states that certain prescribed class of companies are required to appoint internal auditor. So, internal auditor may be a chartered accountant, cost accountant or any other professional as decided by the board. So, the internal auditor can conduct internal audit of functions, processes, activities and internal controls, risk management systems and operational efficiency of the company. An important point is the law itself does not say all companies. It says only such class of or such class or classes of companies as may be prescribed. So therefore we must go to Rule 13. What Rule 13 says? Rule 13 of Companies Accounts Rules 2014. It specifies the class of companies required to appoint internal auditor. So we'll analyze the requirement category wise, all listed companies. So every listed company, Rule 13 clearly says every listed company must appoint an internal auditor. Therefore, if the company itself is listed, internal audit is compulsory irrespective of turnover or borrowings. So this is automatic applicability. If it is unlisted public company, then unlisted public company must appoint internal auditor if during preceding financial year, if satisfies any one of the following conditions. We'll see paid up share capital 50 crore or more, or there is a turnover threshold 200 crores or more. Another threshold, loans or borrowings. Outstanding loans or borrowings from banks or public financial institutions exceeding 100 crores at any point in time during preceding financial year. So these are the triggering points. And another triggering point is deposits, outstanding deposits of 25 crore or more. So if any one of the condition is satisfied, then internal audit becomes mandatory. If private company, for private companies, the criteria are turnover 200 crore or more, or borrowings, outstanding bank or financial institutions borrowing exceeds 100 crore at any point during preceding financial year, then internal audit becomes mandatory. So does material subsidiary status itself makes internal audit mandatory? This is the question. The answer is no. There is no direct provision under section 138 or Rule 13 stating that every material subsidiary must compulsorily appoint an internal audit merely because it is a material subsidiary. So this is the most important takeaway. So then, when will internal audit become mandatory for material subsidiary? Internal audit becomes mandatory only if the subsidiary independently falls under Rule 13 criteria. So it means case 1, if subsidiary itself is a listed company, then it falls under this criteria. If subsidiary is unlisted public company crossing the threshold limits as we discussed, then it is a mandatory. So therefore material subsidiary status alone is not enough, it not trigger to appoint internal auditor. Thank you.